Good day, subscribers. Thank you so much for joining me today. I am Jeremy, and this is the Financial Education Channel. And today we're talking about Under Armour. And is Under Armour stock a buy right now? Now, usually when I do these videos every week, usually I put like 10 stocks in a basket and I pick a lucky winner. This week I didn't even do that because it is ridiculous how many of you guys requested I do a breakdown of Under Armour stock. Like, if I had $1 for every time you guys requested this one, I would be richer than Warren Buffett. No, not really. I'd probably have like $20 or $30 because like 20 or 30 you guys actually requested it. But that's like a ridiculous amount for how many people even, request a stock for me to break down and whatnot. So here we go, guys. Let's jump right into this. Hit a thumbs up if you enjoy these videos where I break down stocks. And let's get into this. So first things up, we are looking at the annual report. We're looking at the annual report in the investor relations page on the Under Armour page. And we're going to figure out what is Under Armour because we're going to act like we're ignorant and we have no clue what Under Armour is. Our principal business activities are the development, marketing, and distribution of branded performance apparel, footwear, accessories for men, women, and youth. The brand's moisture wicking fabrications are engineered in many design styles for wear in nearly every climate to provide a performance alternative to traditional products. Our products are sold worldwide and worn by athletes at all levels from youth to professional on playing fields around the globe, as well as consumers with active lifestyles. So basically, Under Armour is similar to like a Nike, for instance. Nike's all about sports performance mainly. And, people wear Nike that don't even do sports, honestly. Let's be honest, guys. Under Armour's a very similar company. They just have a slightly different strategies, and it's getting very competitive between those two beasts right now. So let's look into this company some more. So here, right now, we're looking at their products. So our product offerings consist of apparel, footwear, and accessories for men, women, and youth. We market our products at multiple price levels and provide consumers with products that we believe are a superior alternative to traditional athletic products. In 2015, sales of apparel, footwear, and accessories represented 71%, 17%, and 9% of revenue. So basically, guys, 71% of their sales came from apparel. 17% came from footwear and 9% from accessories. This is big to me because I believe within 5, 6, 7 years from now, the footwear category will be much bigger than actually the apparel category. Right now, apparel dominates, for Under Armour. They're getting 71% of their revenue from that category. But footwear, I believe this is a huge, huge opportunity for Under Armour. And I believe footwear will surpass apparel for the company. So, and that doesn't mean apparel is going to drop off. That's going to keep growing, in my opinion. But the shoe market is going to be huge for them because look at, guys, just in 2006, they just came out with football cleats, basically. That was their first footwear-related product, and it wasn't until 2008 that they actually released, athletic shoes and whatnot, and they really took the whole shoe game seriously. We're talking 8 years, guys. They've only been in this market for 8 years, and they already have 17% of their revenue coming from this space. So I see in the next 5, 6, 7 years, like I said, I see more revenue coming from the apparel, from the footwear market than the apparel market. Absolutely, no question about it. They're going to grow into a giant beast the same way, footwear dominates for Nike. I believe the same thing will be said for Under Armour. Now, let's talk about the sales and distribution. So we're going to read the second paragraph here, guys. We also sell our products directly to consumers through our own network of brand and factory house stores in our North American, Europe, Middle East, and Africa, Latin America, and Asian Pacific operating segments through websites globally. These factory house stores serve as an important role in our overall inventory management by allowing us to sell a significant portion of excess discontinued or out of season products while maintaining the price integrity of our brand and in our distribution channels. Through our brand house stores, consumers experience our brand firsthand and have a broader access of performance products. In 2015, sales from wholesale, direct-to-consumer, licensing, and connected fitness channels were 67%, 30%, 2%, 1%. So basically 67% they're getting from wholesale, so that's selling into Dick's Sporting Goods and all the other stores you could possibly think in that Under Armour sells into. 30% of revenue coming from their actual stores or from their website online. So that's a pretty good amount, 30% coming direct from their stores or whatnot. That's a fair amount, guys, because think about it. Their store revenue, they're getting way more profits than they are if they're selling wholesale, because wholesale, they have to sell for, I would say 60% to 65% of what they would in their actual store. So in the actual store, they're getting full profit on that. And you can say, well, of course, they have to, they have the cost of the stores, they have to build them, they have the employee costs and whatnot, but still, it's a wash in the deal. They still make way more from the stores sales coming in than they do selling to Dick's Sporting Goods or anyone, Sports Authority, they went out of business, or any of the other places they sell into. They make more profit in their own store. Now, revenues by segment. This is monstrous here. North America represents 87% of their revenues currently. Now, it was all the way at over 94% in 2013, so they're making strides there. International is up to 11%, where it was only a little under 6% in 2013. This is huge here, guys, because they have a huge market to go after internationally. You look at, and their market share, their percent of net revenues is going down despite them growing revenue monstrously in North America. They've grown a billion and three, in 2 years in North America, but yet their percent of net revenues has gone down in North America because international is going to be huge for these guys. I can see a day when international makes up more revenue than actually the North American market. I can see a day when Under Armour is doing 60% of revenues international, 40% North America. Absolutely. And I don't think it will be that far down the road. Maybe 6-7 years down the road, we will see things like that. So that's just a huge opportunity for them here, guys. International is huge. Now, let's look at some of these athletes they have. NFL, they're now the supplier of footwear and gloves. We know NFL is by far the most popular sport in America, and to be, have the gloves and the footwear now, all Under Armour in the NFL, that's huge. That's a huge win. Steph Curry, he's turned out to be a superstar. He's the second most popular player in the NBA. He's an Under Armour athlete. They're now the Major League Baseball. They're the official performance supplier for Major League Baseball. Bryce Harper is one of their players. They have Tom Brady as one of their athletes. Canelo, probably the biggest boxer out there right now. They have a lot of huge name athletes. Now, most of these athletes in the sports they're doing right now, they're mostly all North American related, right? The NFL, obviously mostly North American. NBA is a little more international, but still mostly North America. Obviously baseball. Canelo, he's huge in Mexico, but also big in North America. So they're not doing a huge amount, Andy Murray. You look at, they have Jordan Spieth now, guys. They have Jordan Spieth as an Under Armour athlete. Look at his Under Armour. He wears an Under Armour belt, Under Armour pants. Under Armour makes sure that guy is dressed head to toe in Under Armour. Holy smokes. He's the best golfer in the world currently. Some will say maybe McIlroy or someone like that, but, who knows? They're 1 and 2. One of the most important golfers in the world, Jordan Spieth. So he's a bit of an international, but still, a bit North American, because golf is so big here in North America. So their athletes are mainly North America, and then we're going to bring another subject up here in just a minute, guys. So keep in mind what I just said there. So now we're looking at our limited operating experience and limited brand recognition in new markets may limit our expansion strategy and cause our business or growth to suffer. So basically what this is saying is if they can't figure out how to market their products internationally very well, then they won't be able to really realize the opportunity that presents itself for the Under Armour brand. Nike's been international for 20, 30 years now, so they're internationally known in China and Japan and all, you can speak to anybody pretty much anywhere in the world, they know Nike, the brand. Internationally, Under Armour is not very known. We've seen only 11% of their revenues come from international. Now, what I just talked about with the athletes, most of their athletes are North American based. So in my opinion, what I would like to see is Under Armour sign some big name soccer players, international soccer players. Soccer's big all across Europe, all across really the world mostly. So I see that being a huge opportunity. If they can sign some huge name soccer stars, that will I think speed up this whole process of Under Armour being able to brand itself internationally and expand at a much faster rate than they're currently expanding internationally. Because you can't just have all North American athletes and hope they, become such huge superstars like a Michael Jordan that somehow they become known around the entire world. You really got to make some bets on some of these international soccer players, in my opinion, that have huge followings. So that's what I would like to see Under Armour do. If they do that, I think it will be a great sign, and I think it will speed up the international growth a great deal, because this does work. Signing big name athletes, making them wear your clothes, it does work, guys, because kids see it, adults see it, and they're like, oh man, so-and-so's wearing that. I should probably wear that. That's pretty cool. So, okay. Now, this is this is also under the risk factors. By the way, that last paragraph was under the risk factors. This is also under the risk factors. Kevin Plank, our chairman and CEO, controls the majority of the voting power of our common stock. Our Class A common stock share, so the ones that you and I could buy, has 1 vote per share. And our Class B common stock has 10 votes per share. Our chairman and chief executive officer, Kevin Plank, beneficially owns all outstanding Class B common stock. Now, how is this even allowed nowadays, guys? I'm like, how is this even still allowed that CEOs can do this, where they have full voting power even on a public company? It used to be reserved to, if you're a private company only, you can do whatever you want, but a public company, you need you can't just control the company like this. So basically, if you're placing a bet on Under Armour, if you're investing in Under Armour stock, you're betting on Kevin Plank and his ability to successfully implement plans and all these kinds of things, because he has so much voting power. He has 10 votes for each 1 share he owns, versus you having one vote per share. So it's a huge difference. He controls where the company goes. He controls the board of directors. He controls who he brings in for other executives and things, guys. So if you're betting on Under Armour, you're betting on Kevin Plank. That's the bottom line. No different than when I talked about Facebook a month ago or so. Zuckerberg has very much control on that. Same deal here with Kevin Plank. So let's look at these financials here, guys. Huge growth. Look at all the way on the right-hand side there. 2013, they did $2.3 billion in revenue. 2015, they did just under $4 billion. We're talking about 80-90% growth in revenue in just 2-year time span. Let's go down and look at the bottom. They did $162 million in net income in 2013. $232 million in net income last year. So we can see that they're growing revenues at a great rate. They're growing net income nice, but not as much as I would expect, but they're probably funneling money a lot of places right now because they're in such growth mode as far as net revenues go. So bottom line is, Under Armour's obviously a growth company. It's very obvious by looking at this income statement. The balance sheet. The balance sheet's always important. They have $129 million in cash, and that compares to $593 million in 2014. That dropped a lot. No short-term investments, no long-term investments under the assets. Then we're going to look at short/current long-term debt. They have $42 million. They have $627 million in long-term debt. And so basically, I would rate this as a poor balance sheet. It's not the worst I've ever seen by any stretch of the imagination. It's just a poor balance sheet. When I don't see cash, short-term investments, long-term investments outweighing long-term debt and short-term debt, that's how I rated a poor balance sheet, because they have way more debt than they have cash in the balance sheet currently, guys. So it's a poor balance sheet, bottom line. Next up, let's go ahead and look at their latest quarterly results. Under Armour reports third quarter net revenue growth of 22%. Reiterates full-year net revenue outlook of just under $5 billion. Third quarter net revenues increased 22% to $1.47 billion. Net revenues increased 22% in the third quarter of 2016 to $1.47 billion compared to net revenues of $1.2 billion in the prior year period. On a currency-neutral basis, net revenues increased 23% compared to the period last year. Operating income increased 16% in the third quarter to $199 million compared to $171 million. Net income increased 28% in the third quarter of 2016 to 128 million compared to 100 million. We see fabulous growth here, guys. And something I really liked in this last quarter was the net income actually grew faster than net revenues, and that makes me feel better about, because we looked at the long term, the last 3 years, we looked at the income statement and we saw that revenue in 2013, compared to 2015, it grew monstrously. Net income did not grow nearly as monstrously. It still did grow, but it wasn't like, holy smokes, they grew net income by that much. So the fact that now they're growing net income, at least in the latest quarter, more than revenues, I'm very confident that that can continue, and it makes me happy to see that. It makes me more confident as a potential investor in the company. So let's look at see if this stock is a deal here. So it's right near its 52-week range. It almost hit its 52-week low today, actually. It's at $30.47 where it closed at. 52-week range of $30.06 and almost $48. Then we have a PE ratio of 67, a market cap just under $12 billion. And lastly, we have a forward PE of 44. So what do you guys think here? Am I going to rate this stock a buy or not a buy? And also, would you guys buy this stock? Are you a buyer of this stock? I would love to see in the comments section. I am not quite yet a buyer of Under Armour. If this stock can drop to $25 a share or below, I will start to accumulate shares of Under Armour. No doubt about it. If it can drop to 25 or lower, I will begin to sell my Apple shares. I'll begin to, that's my third stock. I just did the video yesterday on 3 stocks I'm buying now. That's my third stock currently. I would actually start to sell some Apple as long as Apple was trading at a decent range and funnel that money into Under Armour. Under Armour's stock has been downtrending, hitting new 52-week lows. And if that continues, it could be at $25 within, a month or so. If that continues, that's when I will start accumulating shares, because at that point, the risk reward for me is definitely in my favor, in my opinion, because then you're looking at a forward PE in the 30s at that point. And when you got a company that's growing like this, it makes me very happy. So this will be a stock I will be buying if it drops to that level. If it stays above the 30s, I'm not gonna touch it unless it's $30 still in a couple years from now. Then I might go ahead and buy. But in the short term, we'll see. I'm going to keep track of it. If it comes around that $25 range, I will absolutely be buying it. No doubt about it. No doubt about it. I thank you so much for watching this today, guys. Leave a thumbs up if you enjoy these videos where I break down a stock. If you're watching this, you have not subscribed yet, you may want to. I talk about personal finance on the channel. I talk about business. I'm an entrepreneur. I give entrepreneur tips. And we talk the stock market the most on this channel. And I do these breakdowns of stocks every single week. Thank you for watching, guys, and have a great day.